Bulletin closing down 2 1/3%. Deal on the table for potash. It is the largest fertilizer maker in the world, some $40 billion being touted, and potash coming back and saying that that is grossly unacceptable in terms of offers.
Look, it's hard to know whether it is grossly unacceptable. I think at the first blush you would say, well, you know, why is BHP looking at fertilizer? It seems a little bit far away from what is their core business operation, but there is a link, obviously, through the oil component, chemical component. I think there is a natural link back into fertilizer. I quite like the diversification idea. I think diversification for BHP Billiton has been one of its strengths. So in my mind, if they can continue on with that in a sensible way, it would make a lot of sense.
Would a fertilizer operation, the largest fertilizer operation in the world, be a sensible diversification in your book?
I would say yes, and let me try and explain why. Let me try and explain why I think potash would reject the deal. We've been doing quite a lot of work on the food industry generally, and if you look globally, food prices have been incredibly depressed, and that's resulted in food inflation being well under control globally. But if you start to look at a couple of things, you start to look at demand for food, you're seeing those numbers picking up on a global scale. If you look at the ability to supply food, you sense that that's coming under a little bit of pressure. So you're starting to sense that the dynamics within the food market are conducive to a price rise within food. Now, we saw that recently in the wheat price through to a disruption in Russia, but it's likely that off this very low base, you're probably going to see food prices moving higher. As you see food prices moving higher, I think the demand will be there. You'll start to see an increase in production, and that is good in terms of fertilizer demand. And so you're seeing, if you watch the potash share price, it has moved up. Obviously, the deal itself would make people fairly encouraged, I would say, and it tends to move up on the back of that. But they're coming off a very low base in terms of activity levels. They're coming off a low base in terms of what the share price is doing. Potash would be looking at the market saying, we're going into a better environment. We've had a difficult time. Here comes BHP. They're looking to buy us. We're not going to sell at this price, because when they look further out over the next 2 years, they sense that the market's moving in their direction. So I think it's a good strategic move from our point of view. Exactly how much they may end up paying, I don't know. You don't want to overpay for these types of assets. But I think as you analyze it a bit further, you may get more comfortable with the deal. Obviously, the market didn't like it. Probably
this is a knee-jerk reaction.
Yeah, I think so. It's a reaction to the rejection of the deal and not knowing quite what the strategy is now. Do they simply offer more? Do they have to pay up? But I can see that it's...
But you hold BHP Billiton.
Yeah, sure. And I can see how it's quite a strategic thinking around it, and I wouldn't just reject it as a strange thought right off.
Your thoughts on JSE Limited headline earnings per share up 8% for the interim period?
I thought they were good. I was looking at this afternoon what our analysts have been forecasting ahead of our expectations. We own the stock, or quite a bit of it. It's done well, I think. Obviously, the general conditions haven't been ideal in terms of trading conditions, and in that environment, I think they've handled it well. Obviously, the disruptions are, but it's 2 days. I don't think it's a huge crisis. The problem may be in terms of the listings. I heard you chatting earlier on in terms of how many new listings. I mean, 5 or 6 is just not enough. You'd want to see a lot more new listings coming to the market. That would give the JSE quite a nice boost, and I'm not quite sure that is going to happen at the moment. Companies generally are not really wanting to raise finance.
I almost thought that Russell Loebshaw was going to say that the outlook was unusually uncertain and take that phrase from Fed Chairman Ben Bernanke.
But it's a good set of numbers, and ultimately we're talking about a monopoly, right? I don't think they'd like to hear that, but it is, and
especially since they've absorbed the bond exchange of South Africa.
And certainly the numbers coming out a bit above what we expected.
Should we take anything out of the news that RMB Holdings has promoted their Chief Operating Officer Peter Cooper to CEO with immediate effect?
I don't know that you would want to read too much into it. Whether it's part of a bigger strategic discussion, I'm not really sure about that.
And the data, very quickly, we are going to chat to you after the break, but today we've seen a mixed bag out of the US. You look at that industrial production, better than expected. We saw July housing starts, the growth in that, weaker than expected, and then the producer price inflation up 0.2%, and that's the first rise in 4 months, which you said earlier off air is a good thing.
Yeah, I think the data's not bad. The housing number's still weak. The housing starts actually went up. The building permits crashed off dramatically, and building permits are a precursor to housing starts.
But housing starts went up less than expected.
Yeah, so the housing numbers are still bad. You can't, I mean, you really have to scratch to find a good housing number in the US. But I thought the industrial production numbers were good, up 1%. That's a solid increase. You would argue that the ISM in the US has gone softer. So in the next couple of months, you may see industrial production soften. But as it stands, production's doing okay. The PPI I thought was good. The PPI, you've seen a positive outcome. And at the core level, I think it was 1.5, 1.7 month on month. The reason why that's good is it's telling you that the underlying pressure within producer is to a little bit more price pressure. Now, normally we wouldn't want that, but
good. So we're not seeing this deflationary environment taking a stranglehold on the US.
We want to see anything that suggests no deflation, and the PPI was a good news indicator for that. And I think the combination of industrial production looking better and the PPI looking better, they'll probably overlook the housing numbers. Housing's been terrible for a while. Focus on that in the shorter term, so the news flow just today looks and feels a little bit better.